Mic check, 1, 2. What is this? It's your boy Dre La Soul here with some more crypto news and crypto wisdom for your head top. So, of course, we got to discuss Bitcoin and what's going on in this crazy world of cryptocurrency. So, the Bitcoin cycle top is coming, but not just yet. Everybody thought that we was about to get altcoin season, but Bitcoin still has some more room to run. So, the Bitcoin dominance is going to keep going up, which means that altcoin season is due to kind of take a backseat for a little bit. Doesn't mean that it's not coming, but it is going to take some time, right? So listen up. Make no mistake, Bitcoin will hit a new all-time high before we get that gut-wrenching drop into the next brutal bear market. Trust and believe it's coming. But here's the thing. The market always gives signals before everything falls apart. The problem is most people ignore them when they happen. Every cycle, folks convince themselves like, yo, this time is different. But I'm here to give you a spoiler alert. It never is, right? Of course, we don't have a crystal ball here. I ain't got the crystal ball. I'm not like Ian from Earn Your Leisure and Market Monday. But stick around until the end, and I'll break down, some indicators that I've followed based on some of the people that I follow that could save you from flipping burgers during the bear market or just save you from, pulling your hair out while the smart money sails off into the sunset, right? Because remember, just because you took a screenshot of your portfolio when it was up doesn't mean that the money is real. You got to cash in. You got to take those profits. And I fall victim of that as well. I tend to forget to take profits as well. I wish I took profits before we hit that little dip with DeepSeek and all that craziness, but it is what it is. Now, unless we get some wild black swan event, trade wars going nuclear or inflation roaring back, we're mid-cycle right now. So some indicators suggest that we could peak as soon as April or May, while others hint for like late 2025, which is normally around the time it hits like the fourth quarter of that year following the halving. The halving was 2024, so this will be the following year. Fourth quarter will be November, December of 2025. And if you're one of those ancient astronaut theorists, maybe even mid 2026, because some people are believing that your boy Trump is going to allow this market to go wild and run rampant until then. But let's keep it grounded here, all right? Here's what's really, really happening. So first things first, we're going to tap into the global M2 money supply, aka how much money is sloshing and moving around the system. If cash is plentiful, markets pump. If it dries up, risk assets get wrecked, right? So check out this chart right here where it shows Bitcoin's price, the blue line, and global M2, right? Year on year growth of M2 historically, when M2 is rising, Bitcoin is still in business, right? And guess what? We haven't seen the big spike in M2 growth that typically, precedes a market top. So translation, that means that the tank ain't empty yet, right? But here's the real kicker. The percentage growth of M2 might actually be the more important signal. In 2013 and 2017, cycle tops lagged the peak of M2 growth. In 2021, M2 peaked before Bitcoin hit 63K, which for many was the real cycle top. Not that weird 69K like crazy pump, right? Now, if we talk about right now, we're in the middle. Momentum is strong, but no year-on-year spike yet. None yet. Now, next, we're going to talk about the DXY, the dollar index. So the dollar index versus Bitcoin. This tracks the dollar strength relative to other major currencies. If the DXY pumps, Bitcoin usually drops, and vice versa. So that's how those two work. All right, that's the correlation. They have a negative correlation, nonetheless, to say. So as the DXY increases, Bitcoin tends to decrease, and vice versa. So they have that inverse relationship. Now we saw it this week with the trade war. With the trade war drama, DXY spikes. Risk assets take a hit. Look back at previous cycles. Bitcoin made all-time highs when the DXY was at its lowest. Its very lowest. Right? Now, where are we right now? Historically, after Trump won in 2016, the DXY climbed before he took office, right? Then faded after his inauguration. Trump 2.0, same setup. If history repeats, we could see the dollar weaken, pushing Bitcoin up. Remember, it has an inverse relationship. That said, tariffs just sent the DXY higher, so we need to watch if this derails the trend. So the trend might not be your friend this time around. But most analysts still expect dollar weakness in 2025, and Trump himself has said he wants a weaker dollar. If that plays out, it's another tailwind for Bitcoin. So this might sound weird, right? But the next indicator is copper versus gold, the economy's cheat code. Now, this one might sound a little weird, as I said, but stay with me. The copper to gold ratio has a crazy correlation with Bitcoin's price peaks, right? Copper equals industrial demand. If it's up, that means the economy is strong. Gold equals like a safe haven, right? So if it's up, people are hedging against uncertainty, right? That's where they run for safety. So every time copper to gold ratio peaks, Bitcoin tops right after. And right now, the ratio isn't even close to peaking. In fact, it looks like it's gearing up for another run up. So translation means the real fireworks haven't even started yet when it comes to the copper and gold ratio. It's very important, So this is definitely one, even though it sounds weird, copper, many people wouldn't think that it would correlate, but there is a correlation there. Now, the next indicator is the PMI indicator. It's like a sneaky signal. So have you ever heard of the Purchasing Managers Index, PMI? It's a survey that tracks the health of the manufacturing sector. It sounds real boring, I know, but guess what? It has a direct correlation with Bitcoin's cycle peaks. March 2021, PMI hit 64. And what else happened? Bitcoin peaked at 63. Same thing in 2017. Right now, the PMI is at the bottom of the chart, meaning we're still in the accumulation phase. So again, there's more fuel left in the tank. All right. Now, the next indicator we have is the pi cycle top indicator, a simple but deadly signal. So if you ever follow Rec Capital on X or on YouTube, he talks about the pi indicator. I'm not the best at technical analysis. I ain't even going to hold you. But I follow these guys that are really good at this stuff. So this one's been eerily accurate, right? The pi cycle top indicator tracks two moving averages, 111 day and the 350 day. When they cross, it's lights out. So April of 2013, signal flash. Bitcoin peaked 4 days later. In 2017, the signal flash, Bitcoin peaked 3 days later. April 2021, the signal flash, Bitcoin peaked right after. So we haven't gotten that signal yet, which means if history holds, we still have room for Bitcoin to run. Once they cross, we should see the peak after. Now, there's one more clue, and I got to shout out CryptoCon on X for this one because he pretty much broke down the cycle into 5 different phases. You got the bear market phase, or the bear market breakout, actually. Then you got the first breakdown recovery, so it's the recovery after that spike up. Then 3 is the early top. That's when everyone's calling for the top. Oh, it's, Bitcoin's out of fuel. That's it. Then you have the all-time high breakout. So that's when we really, really break out, and then people forget that you got to start taking profits, and they think it's going to keep running, and we get that pico top, which is the 5th phase, and then we start all over, right? So right now we're in phase 4, which means the final blow off top hasn't even happened yet. Historically, the real tops come 44 to 51 weeks after this phase begins. That puts us in September or October. As I was saying before, that could put us around quarter 4 of 2025. So that's a potential range for the peak, right? And guess what? Though that lines up perfectly with Bitcoin's historical pattern of topping out 500 days after the Bitcoin halving. So, all in all, short answer, we're mid-cycle, right? Most indicators show more room to run. And if the stablecoin market cap is anything to go by, the dry powder is stacking up. So there's 200 billion in stablecoins, 40 billion added since Trump's election, since his win. That money isn't just sitting around for fun, all right? It's waiting to be deployed. Now, some folks think that this time could be different. Maybe Trump's economic policies and all that accelerate a recession. Maybe the yield curve uninverting is a warning sign. But based on the data we have right now, the most likely scenario, one more big push. April, May is a solid window for a cycle top. Maybe late 2025, a real possibility, even 2026. But, I mean, I don't know. Either way, we're not there yet. But stay strapped, stay focused, stay locked in. These charts are only right until they're not right. All right. So keep an eye on the market sentiment, how people feel about the market, the macro trends, what's happening in the world, and the technicals. Because when the time comes, you need to be ready to take profits. And I got to remind myself about that too, to take profits. So don't be just staring at the screen, staring at your phone, taking screenshots. Stay smart, stay patient. Your boy Dre La Soul. We're going to catch you on another one. This is Crypto Rants, and we out. Make sure you like, subscribe, share, tell a friend to tell a friend. It's your boy.